presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at a couple of things here, folks, because, when you trade a lot, you run into the possibility of running into trader fatigue. That usually happens after a good run, and we've certainly had a good run here at TFNN. We have ups and downs just like everything else, but you've got to be aware of when this happens. Now, this is the chart of natural gas. We've been in that position for about 4 days, had a little bit of a profit, the most about $750, and I elected to put the stop at break even and then buy it at a lower price. Well, our lower price missed us by about $150, and now it's up a little over $1,200 today. Now, I don't count that as a trading error. That's a trading decision. Those are two different things. The trading error would be I didn't put a stop in and then went straight down, or I bought it on extreme strength without a stop on the way up. That would be a trading error. This is a trading decision. I make those all the time. Sometimes they're good decisions, sometimes they're bad decisions. But that's what trading is all about. And don't beat yourself up because when you make these, and fortunately is the word I want to use. We have a very nice following here at TFNN, and they're learning and they're doing really good things on their own. They send me trades of stuff that they're looking at. Last night early, one of our listeners, one of our Tiger folks came in from Denmark and said, hey, look, this looks like this gold market's getting ready to break pretty hard after it opened down at 207, rallied up to 221, and he pointed out that might be a 382, and it certainly was. The market dropped another $25 an ounce. Now, let's just go on and take a look at one other one. Very, very important, this next one, because this is the chart of the soybeans. This is July soybeans. We were able to buy that first bottom, and this is that's not the one I wanted to show, so hopefully I can find the one I want to show. Doggone it. I don't think I have it, but I'm going to show this one anyway, because you can remember, those of you that are following me know that we've had a really nice move in this one to the tune of about 60 cents. We left another 40 cents on the table. But you see, now we're backing off. And yesterday's low on Thursday, Thursday, was right at the exact 61% retracement at, I believe, 14.58. Well, it rallied about 6 or 7 cents from there. And then coming in Sunday night, it was sitting right there at 14.60. And I said, look, it's got to have a chance. And we bought it. It rallied up about 6 cents up to 14.66 and is now going back below the 61% retracement. And here again, I'm looking at this from a risk control standpoint because this market is still in a downtrend. You can see we've had lower highs here for the past, at the beginning of the month. So this is still in a downtrend, even though we think something big is going to happen. It might not happen today, and it's not happening today. So we're going to take, it looks like from where the market is right now, we're going to take about a 4 or 5 cent loss, let's say 5 cents, $250. That's not a trading error, folks. That's a trading decision. We made 60 cents on it on the way up, which is nice, and we gave some of it on the way back. That's all it is, folks. It's a trading decision. The difference between a trading decision and a trading error is a trading error is very simple. These are the words of Roy Longstreet. The first mistake teaches, the second mistake kills. The first mistake is you went into a market and you had it analyzed wrong. That's the first mistake. The second mistake is you didn't do anything about it. And that's what you've got to learn to do, folks. Traders like myself, John Cheverny, and so thousands of other people know that when you make that first mistake, you've got to go in and correct it. It'll do two things for you. One, it'll clear your head so you don't have to worry about when the next trade is coming. You'll be able to do it. You're not going to be right all the time. You're going to have a period where you're going to lose 4, 5, 6 times in a row, maybe 8 times, 10 times in a row. But then you're going to have that proverbial streak that comes out and, makes you feel like, oh, my goodness, Godzilla would have a hard time wrestling with me today. So that's why you got to remember, folks, the difference between the first mistake and the second mistake. And that's what, if you learned long enough, you trade long enough, you realize you can't make that second mistake. Behind me on the desk up here, behind the desk here is the painting that I have, the number one rule on that, of the 10 rules that are there that John Hill gave me back in through the years. I don't remember which year it is. This painting I had reproduced for him, not by the same artist because she had passed away, but it was it's a 44 by 44 oil painting, and it's exactly like mine. I don't know where it is now because John has since passed on, but it had all the rules there that he had given me. And when I was in the Drexel office, I had those on little 3x5 cards on a bulletin board behind it, each of the rules there. And one of the customers that I had, Jack Darnielle, his wife happened to be a very famous artist that was a big fan of Ron and Nancy Reagan, and her paintings were $3,000 or $4,000. This was back in the 70s, folks, so that was a lot of money. I don't know what they are now. I happen to have an old flower painting. I shouldn't say it that way, but anyway, the real reasoning here is the fact that if you're going to keep these rules up there, you've got to respect them. And the number one rule on that board there is do not add to a losing position. Folks, I can tell you with 1,000% accuracy, the number of times I've ever done that worked, you could count on one hand and still be missing 3 fingers and just barely make it. I mean, it never happens. Stop and think. You're putting a trade on where your analysis is already wrong, okay? You've already exceeded your risk control, all right? And the third thing is now you've exposed yourself to even greater risk by you doubling your position in a position that's not working. Be like Tom Hugard, double the position that's working. But you don't want to do the ones that are against you. That's silly. That's not very good business. And really, it's not. So remind yourself of that. You've got to do that. There's no other reason to do that. Someone asked me if I had a picture of John's book. I think I have right here. I keep it right here. I can reach it. Commodity Research Institute, 1966, by John Hill. I put this up here. I don't know if you'll be able to see it very well, but that's it. It's a little book. It's got, it's out of print now, of course, but it has about 128 pages, but it's, as you can see, it has all the ABCD stuff long before anybody was doing this. This came right out of the Gartley book. I was fortunate enough to get a copy to John, but many people had done a lot of the stuff that Gartley had done. Franklin Tubbs did the work. Charles Lindsay of Trident and 3 or 4 other people worked on those ABCD patterns for many years. And so that's why they have been popular. And you know why they're popular, folks? The doggone things work. That's the big T. That's the big takeaway here. You got to remember that's what you're looking at here. So let's keep in mind. Now, I talked on the other show about the banking stocks. They're starting to show some type of life. I mean, they're not bouncing. This is a proverbial dead cat bounce. But we're in an area now where we're seeing a lot of different conflicts in news. So let's pay attention. Let's don't lose the prize. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've been asked to take a look at the NASDAQ. Don't trade this one very often, probably maybe 5 or 6 times a year. And the only reason is it has porcupine's effect. It goes up and down with these spikes that I particularly don't like. It's much easier to trade the S&P or the Russell or the Dow Jones, the Dow Jones, of course, being the easiest. Now, what we're looking at here is a market that has been defying human nature, going up in face of some really negative stuff with banking things and all the other stuff that's going on, and yet it's held up here extremely well. When you look at the fact that the S&P is trading at around 4130 right now, folks, and remember we had that big high up there at 4172, which was a major ABCD. All we could do was drop 80 handles, and now we've brought back, and we've already taken 50 of those handles back. So it's acting relatively bullish, given the fact that the Chinese Navy is patrolling the streets of Taiwan, the Straits of Taiwan, and then one of our battleships is going to be out there too. And anybody that sent that ship in there, yeah, you're going to say force, but you don't mess around with people when they're in military exercises. There's no way, folks, let's get off the soapbox, Larry. We're not going to talk about those kind of things because that don't make no difference. Okay, let's take a look at something that does make a difference and be like Woodward and Bernstein and follow the money. Here is the U.S. dollar index. This is the reasoning why we're seeing so much weakness across the board in the currencies. You'll see we held this 78% level for 3 days, and now we're starting to rally. There's a lot of news out there about the death of the dollar coming with blockchains and cryptocurrencies, but the dollar's been around for a long time. It is under assault, and what Bill Meridian was talking about just a few minutes ago is the fact that we have a regime over there in Saudi Arabia that really doesn't like our country very much, and so they decided to drop back production. That pushed up prices quite a bit, and as Bill pointed out, it really didn't make a lot of difference because later on prices drift back to where they're supposed to be going anyway. I'm going to re-answer, go back to the same question that someone asked me over the weekend, because we had been talking last Wednesday and Thursday about this crude oil move that we had happen in September of 2019. I was giving a seminar with Bill Meridian, let's try it again, with Tom Hugard and Dr. David Paul, and you notice here that the market gapped up $9 from $60 to $69 a barrel. This was on the Sunday night. You'll notice Sunday night the market came down into Monday morning. Monday morning it rallied up and almost made a new high. And we had sold it up there, and we covered it down at this level right here, which was a small ABCD pattern plus a 50%. And then when we got here, we had a beautiful 135 pattern. That turned out to be a really good trade as crude oil dropped $11 a barrel over the next 3 months. But of course, I'm not in that for the next 3 months. I'm in it for the time frame that I can see how much my risk is. And that's what I'm really looking forward to doing, is when I put these trades on, it tells me how much risk I have. When I look at a chart, folks, and those of you that get the service that we have 24/7 plus the newsletter, I look at daily charts. I look at 4-hour charts. A 4-hour chart, you get to see 6 weeks. So you can see just about everything you need to do. From there, I go down to 30-minute and then down to usually 4 minutes, sometimes 5 minutes to get my entry point. Those are the things that I point out when I'm doing the videos each night, and that's the kind of trades that we'd like to set up. We had a very nice trade in the British pound last night. We also mentioned that the S&P was into strong resistance up there at 41.41. And of course, it went down to 40.98. It's now back to 40.30 and change, coming back strong. So, you know, you got to be able to take profits. Remember, when you're looking at a 4-hour chart, that's going to be a lot different than a 15-minute chart. The patterns are going to be different. You're going to be trading the same commodity, but by golly, that doesn't mean it's going to mean very much, right? That's for sure. You know, you don't know which ones are which. Nobody knows that. So why even worry about it? That's the whole key to what you're paying attention to. Now, let's get back to something that's interesting to me, and I want to bring it up to you because I do follow seasonals, and we're in one of the strongest seasonals for soybeans that you can find. Hold on here 1 second. All right, I got to go to the 4-hour chart, I believe. Nope, it's the hourly chart that I want to look at, and we'll just get it up here. And I've looked at so many of these over the past few days. Oh, I got to do one quick thing here, and then we'll be off to the races, okay? All right, here's my 2 cents worth, folks. So get this up here. This is the hourly chart of July soybeans, okay? This is the one that bailed me out back in 1975. It was, what was it? It was January of 75. I began buying when it was down here, okay? And as it started up, I was buying soybean oil. Oil is 20% of the beans. Meal being 80%, but oil was the margin on oil, folks. A contract of oil was only $190 to hold $5,000 worth of oil for a year was $190 is all it was. And I bought more there, 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 and I sold it out all the way up here. But look where we're sitting right now. We're sitting at the exact 382 of the low we made back here 14 days ago. And this is very strong seasonal to buy the second week of April and hold it through the 4th of July, if you can do that. So right now we have a lead in it, but not much. So we're going to see whether it's going to make it or not. I put my stop below here by about $250. We were originally risking 15 cents below the 50% because the market moved in our favor 7 cents. I decided to keep my stops relatively close and go back in. Now, I miss some of these. I know that. But by golly, I catch a few. And that's the main thing that we want to keep reminding ourselves what we're doing. Now, another one that remember last week we were on here and we were looking at a really neat pattern in the British pound. This is from our letter over the weekend, but I'll bring up this British pound chart so you folks can take a look at it. But this has had a perfect 3 drive to a top pattern. This now has, we covered it on the first 100 pip down, and we sold it back on the first 382 retracement, and that's given us another 80 pips. So we made 180 pips on this over a period, which is well over $1,000. And so that's why we want to pay, very, very close attention to this. We do not want it to go to a loss on this second position. So you drop your stops down so you're in a risk-free trade. Okay, that's the main thing of what we're trying to do here. I hope that makes sense. If you have any questions, Al tells me that the lines are so busy right now that there's really no way you can possibly get through. But if you can try to get through, then you should be okay. I think it would be all right. Anyway, let's move on here, and we'll take a little break. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking about soybeans. I wanted to spend just another minute or two with the soybeans because, I trade them quite a bit, and we're in an area where they're very, very interesting. Hold on one second here, and I'll get this chart up to take a look at what we're watching here, because we have a situation here that looks really interesting, and so far you folks might be able to take advantage of this. Now I don't, and the reason why is if I've got one grain on, I'm not going to double a position in grains because of the fact that I'm looking at maintaining the capital of the people that go through 24/7 and listen to our broadcasts each day, and then also the videos. But look at this. This is the wheat chart, folks. Now remember, when this was $13, nobody wanted it. Now there's $6.70, and everybody wants it. Nobody wants it. Look at this beautiful head and shoulders pattern. It couldn't be any better. You've got left shoulder, right shoulder higher than the left shoulder. The ratio's right at the 78% level, so you're only risking 10 cents here. In fact, less than that because it's moving pretty good today. So that's we had a choice but doing those, but we had a nice run in beans, so I kept it there. I gave them the choice if they wanted to do this, but this is a beautiful head and shoulders pattern. This pattern, and Dr. Andrew Lowe set up the parameters for this. The right shoulder has to be higher than the left shoulder in a bull market, lower than the right shoulder in a bear market, and the distance between the left shoulder and the right shoulder and the head should be quite symmetrical. Now, he doesn't know Fibonacci, well, he does, I'm sure, but he didn't say 618 or 786. I'm looking at that because that gives me a risk parameter. Because if we get below that, we could easily go down here and make 3 drives to a bottom. I don't want to have any part of that. So that's what I'm trying to do is when I look at these things, to see, where we are, to keep our capital intact the best we can, because we know we're going to catch big moves like we had in bonds and soybeans and gold and some of these others. But you're on the same token, you're going to get some of them, give some of them back. Now, I got one other comment from Europe this weekend and asked me to talk about why I don't do the trade. He's been a customer for 40-some years, and why I don't do the trade of the year that I did for many years, and I'll explain that in just a second here. This is the theoretical one that we were looking at. If you remember, we were looking to be a buyer of coffee down in here on the weekly chart. We had a nice run here, and we put our stop in so that we wouldn't lose anything, okay? At one time, it had $2,300 in it, and I don't know whether people took it or not, but we were doing this by the book, and if it took us back to break even after being up that much, we got out of it. And of course, then the market rallied, and it's just pulled back recently here last week. That you can see there was a perfect 61% retracement and then running to the upside. The reason why I don't do the trade of the year, I did it for 14 years. I did 6 or 7 of them here with Tiger Financial. But I tell you what, folks, the reason why is there's so much questions about where do I do this, why do I do that, why are you doing this, why are you doing that, and I can't answer some of those questions, because I said, why didn't you get out here, why didn't you get out there? I don't know the answer to that. In my mind, I see what I'm looking at. It's all based on risk control, but I can't say that each question that someone asks me, whether I'm going to do it right or not, I make a decision. Sometimes they're wrong, sometimes they're right, but that's what you do when you're trading. You pays your money and you takes your choice. That's the main thing. There, Amos Hofstadter had a little plastic. Well, it was wooden. It was a hand engraved. Well, I guess it was done by a tool, I'm sure, but there's a little wooden plaque on his Reuters machine, because we didn't have these kind of machines when I met him, back in 1970. Oh my God, when was that? I met him in 72 and again in 73, and then in 75 in January he was killed in an automobile accident down in Miami, Fort Lauderdale. But the little plaque said, "Has the market reached your objective?" That was point 1. Dot number 2 was, "Has anything changed your mind about your position?" That was dot number 2. Then dot number 3, which was an exclamation point. If you can answer yes to any of those 2 questions, you can exit the position. If you don't exit the position. So if your opinion's changed on the market or you see something different, then you can exit. But until that time, don't change it. That's the mistake I made in the natural gas, folks. I mean, we didn't have hardly much of a loss in it. The most we had was like 7 points. Now it's up 21 points. But that was the decision that I made last Thursday. I'm glad that I did it, and I stick by it. Now, what I'll be watching for, and I'll be watching very carefully, just like I'm doing soybeans here, I'll be watching for that first pullback. And it might take 2 days, it might take 3 weeks, but I'll be there when that bell rings, and I'll get part of that move. Always have, always will. Take a lot of losses along the way, but going to take a lot of profits along the way too. That's the name of the game, and that's what you got to keep trying to do. Let's switch over here to another market that was extremely good to us. It is getting ready to be good to us again. This is the June cattle, folks. I haven't checked it yet today, and boy, if I miss this one, I am not going to be a happy camper. There is a beautiful 3 drive to a top pattern coming up here. That looks like the 168 or something like that. Let me double check to see where it is. Excuse me, 166. Let me double check to see if I can get a price on June cattle here, folks. And no, we're not there yet. We're only at 164. They're up about a half a buck today. But boy, watch this one, because that's a beautiful pattern. That's got everything that you could possibly ask for. You got perfect symmetry. There's nothing crazy about it. You can put your stop in. You're setting exactly at the 1.618 at 166. So I'll be following that one really closely as we go through some of these other things that we're looking at today. Now, I've had a lot of requests, but no call-ins. I wonder what that's all about. Okay, asked me to take a look at the Chinese market, and I'm going to get it up here. This is the daily. I don't do the Shanghai index. I do the FXI, which is a ETF for the Chinese market. I don't know never traded it. I just look at it for purposes. You see, we had the 50% retracement here, the big ABCD. Now we had the rally to 382. We're just hanging out here over the past 3 weeks. Oh, they just told me that a line is opened up at TFNN, so if you have a chance to call in, it's 877-927-6648, and you can speak to Billy Ray Valentine, Capricorn, in person at the offices of 100 South Broad Street, Philadelphia, Pennsylvania, zip code 19473. All right, folks, let's see what our timetable says on the wall up here, and we've got another minute to go, so I want to bring one other chart that someone asked a question about. At least we're getting questions, and this one is about one of our favorite places in the world as we go across the pond over to Hong Kong. And folks, this is a really perfect technical market. We made that bottom. You'll see way down here at 14,000. Here we are up now around 21,000, and this has been one heck of a rally. This is still a very bearish market because you had lower tops in here. The last retracement that we made a week ago was right at the 50% level. So that's telling us that this market is not out of the woods yet, but it's getting closer. And that's the key, to keep watching it each day, because you're not going to have a trade every day. You're going to have a trade, unless you're day trading, you can day trade the S&P or some of the others. But that's what we're watching. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors. Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, someone just in the Tiger Den just asked what am I looking at right now. I posted a chart here. This is a 15-minute chart. It's a 30-minute chart of the S&P. And we went up and we hit some major resistance at the 618 retracement of the high we made overnight and 78% retracement of the high we made earlier in the evening at the 382. That was when the S&P was trading at 41.35. You'll see there's an ABCD pattern there also. But there's other things. Oh, my goodness. Is this true that someone got through on the phone line? Are you joking me? Oh, my gosh. We got Michael from Toronto on the line. Michael, how are you doing?
Hi, Larry. Thanks for taking my call. How are you? How was Easter?
Easter was wonderful, as always. How was Easter for you?
Easter was quiet here in Poland. It's a holiday here.
Sure.
And it's called Wet Monday, and so everything is shut down.
What city in Poland do you live in, Michael?
I live near the Ukrainian border. I'm doing my Polish taxes. I did my Canadian taxes. And then I discovered when I went to one of the Canadian news websites that the Canada Revenue Agency, the union, has decided to vote for a strike.
Oh,
and
boy.
the deadline for tax submission is May the 2nd, because it's 30th on the weekend. So it's going to be either I think it's the 1st or the 2nd. I think it's the 2nd of May, the deadline. But I already shipped out my Canadian return about 10 days ago, and I got to file a Polish return because I'm a dual citizen. And there's a tax treaty between the two countries, so I don't really pay any tax. But last year, 2022, I made a lot of good money. And I don't have a existing tax file here in Poland. So the tax preparer is signaling to me that I may have to ante up some money to put on reserve so I don't flee the country.
Okay.
Yeah,
it's a good idea to do that.
There are a lot of, how should I say, Polish Americans from Chicago. They'd come here and they'd have a good time. And they'd overstay 180 days. So technically after 183 days, you're a Polish tax resident. And they wouldn't file. They'd just get on a plane and go back to Chicago. So the government would lose a lot of tax revenue.
Okay, what's your question? What's your question? Yeah, what's your question for the day, Mike?
The question for the day is, if I'm a hedge fund manager and I'm chasing alpha, and these earnings coming in for J.P. Morgan, Goldman Sachs, Citigroup, they're good. They're either in line with expectations or they beat the market. And knowing the fact that many of these hedge fund managers, they're long Microsoft, Google, Apple, and they want to chase alpha. Do you think they would basically relinquish their flight to safety trade in the triple Qs and get into the XLF banking stocks?
I doubt that, and the reason why is these guys are really strong trend followers, and those banking stocks they're not trending; they're going straight down. So I doubt very seriously whether they would. But that's my opinion. Looking at some of the things I've seen them do in the past, but I don't think that's what they would be doing, Mike.
Really think so? Yeah, I mean, I'm looking at the calendar here, right? And on the 19th of April, you've got a new moon. Okay, you've got a VIX expiration. Okay, and then the 20th, you've got this really nasty solar eclipse coming in.
Yes.
Well,
that's in 10 days, my friend.
We have a swoosh down.
Well, we certainly could. That's a long way, 10 days from where we are right now. I'm looking at, what I have to do right now to see whether I want to be a buyer or seller. And I thought when we got up to that area of 41.35 in the S&P, that was a relatively good spot. It hasn't exceeded it yet, but that's all I'm looking at is just that 2 days action. Because with that 2 days action, Mike, I can control my risk within $400 or $500. If I'm trying to do something for April 10th, I've got to get a pretty wide berth, and I don't like wide berths. I like a little shallow berth that gets me out of the stormy seas.
Okay, but that 20th solar eclipse, how significant is that?
Well, we're going to have Shane Smolian on next week to give us an idea of what he thinks it's going to be. So he'll be giving us a heads up on it, and also we'll have Norm Winsky on next week, and he'll be telling us too. So I'll let the two astrologers. I'm an ABCD pattern recognition swing trader. The astrology I keep in the back pocket if it all lines up. So if we get at a real nice level of pattern recognition down there on the 20th, I'm certainly going to take advantage of that just because of those two major lunar cycles that you mentioned.
Okay. Thank you very much, Larry.
Hey, Mike, anytime, my friend. Jak ma dobrze. Okay, we'll be we have one other thing I wanted to mention to you folks. Someone asked about the larger time frame here on the S&P, and I'll bring this up what we were looking at last night. You would be able to see it, so hold on one second, because this is where we were on Friday. Of course, we had that thing from the Fed come out. Oh, this doesn't draw it right. Hold on, it shows the. No, it doesn't. Let me do this correctly, because the thing was straight up and then straight down. I wanted to bring this to your attention. You'll see here, this is the chart of where we were last Thursday plus today's action. You'll see the 61% retracement that we made here on Good Friday. That was where we were right up in here. Okay, then last night we opened right in this area right here. See, there was your 135 level. That was a 382 off of this number right here. Then we came down, and then the rally back has taken us to the 78% level of this, 61% level of that. That's basically a 135 pattern, and if we go popping above that, we're going to be going higher. The thing is if this is taken out, this is the 61% retracement on the high from February 6th. That is so extremely bullish, folks, that I can't tell you how important that was. But today's low, we went down here. You see, we made a lower low here today by just 2 or 3 points. That was a 382 off of the low from way back on March the, the 12th or something. So these very, very interesting times that we live in. So nothing's out of the bag yet, but it's trading between support and resistance, and that's a tradable pattern too. All I'm doing is watching, 618, 786 and see how they line up. If they line up good, I'm interested in taking it. And if they don't line up good, I'm just going to stand aside and see what's going on. I personally don't believe that this banking thing is done yet. And the reason why is all of the people that were involved, the Secretary of the Treasurer, Jerome Powell, the Federal Reserve, they said it's all finished, it's all taken care of. Yep. I've heard that story before, and I didn't believe it then, and I don't believe it now. That was back in 2008 when they said that the home buying thing was finally in control. Yeah, well, it was in control into 2009 on March the 5th with the Dow down, 65% from its high, trading at 660. So that was not a good thing to have happen. So anyway, we're going to pay close attention to these things each day to try to give you some good trades. We're going to have a break coming up here, and then we're going to, I think we're going to wind it up here in just a little bit, about 39 seconds. We will have tomorrow as our guest, I believe, oh my goodness, who did I have on tomorrow? I'll have to double check. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, folks, I posted the chart of the hourly chart of the gold over the past 3 or 5 weeks. You'll notice that we have a really nice, beautiful nominal cycle bottom forming. You can see those two little things that look like smiley faces. Those are just nominal cycles. It's due to come in today. You'll see it's setting right at the 50% retracement of the middle one, and it's setting at the 618 of the smaller one. That tells us that we probably made a bottom down here at 1996. We're now trading $10 higher than that right now. Now it hit it exactly on that number. So it's going to be interesting to see if we rally from here, because if we don't come out of here really strong, that's going to tell us that, something is wrong, and then gold's going to go down lower. But right now, it's sitting in the same situation, just like soybeans. It could still have a pretty good move to the upside. So one of the things I'll be looking today and the rest of the day and early tomorrow is to see what type of movement we get between 1196 and 2006 to see if there's a little bit of a pullback. That's going to tell me that 1996 is a very, very strong support, and I could put my stop below there and not risk very much. And that's what pattern recognition is about, folks. It's about trying to find one that you can put your handle on it and say, yes, I know what my risk is. I know my profit level is going to be 3 or 4 or 5 times to 1, and that's the one that you try to work with. So keep that very closely in mind. Regarding astrology, folks, I've been doing this a long time. I understand bits and pieces of it. The problem is the people that I have on as guests are so much more experienced in this. Some of these guys have been doing it their whole lives. Even, I've been doing this a long time, but I've not been in astrology except for the last 40 years. But let's remember one thing, folks. Live every day in an attitude of gratitude, and may God bless. And do something good for your neighbors, because not everybody has it as easy as we do. So we'll see you on the flip side, folks. May God bless.